I bet you think you don't need to know about mortgage-backed securities. Well, you're wrong, because you don't need to know about Wait, no, you're right. Of course you don't need to know about mortgage-backed securities. But you're not here because you need to be here. You're here because you got lost in the depths of YouTube, which tells us both a little something, that you have 2 minutes to kill. Combine that with a burning desire to learn something today, and you're in the right spot. Lucky you. So let's knock this out so that you can go to bed a smarter person than when you awoke. Awake, my soul, with mortgage-backed securities. A mortgage-backed security is a bond, much like a US Treasury bond or a corporate bond, except rather than being backed by tax receipts or assets and earnings of a company, they're backed by mortgage payments and the real estate behind those mortgages, or sometimes a guarantee from places like Fannie Mae, Freddie Mac, or Ginnie Mae. One way to look at them is like a small business that may be worth many billions of dollars, but it has just one employee, 0 investors, and many different outstanding loans and loan officers. There's 0 investors because people who buy mortgage-backed securities aren't so much investing in them as much as they are lending them money, so that these securities can then lend money to people who want to buy homes. There's not a lot of upside to them. They're more just a safe place to park some money for 3, 4, 5% gains. Nobody's getting these to get rich off of them. But for the sake of this video, we're still going to call these people investors. So why just one employee? Well, mortgage-backed securities don't act. They just exist. Market events may make their values fluctuate a little bit, but this isn't because of anything the security did. Stock prices may go up or down based on management decisions, but mortgage-backed securities values will go up or down based on interest rates and then how fast homeowners will prepay, refinance, or default on their mortgages. Now again, nobody's getting rich off of these. They're simply helping the rich get a little bit richer and helping everybody else buy houses. And also, these aren't really an investment in real estate. If you have a $300,000 mortgage that's in one of these securities and your house doubles in value, that mortgage is still only worth $300,000. On that note, once these securities are issued and their business starts, so to speak, they're closed off to any new assets or mortgages. Owners will come and go, but any mortgage that is going to be in that security for the life of it is there on day one. Now, back to why one employee. Their entire job isn't to generate new business ideas or figure out how to grow the firm. It's simply to sit at their desk all day, wait for payments to come into them, and then forward those payments off to investors. And then once that last investor is paid off and that last mortgage is paid off, the mortgage-backed security closes its doors forever and is never heard from again. It's so sad. Now, there are 2 things about mortgage-backed securities that make them more appealing to investors. First, they come with a type of insurance that guarantees the investor will get their money back even if homeowners don't pay for their mortgage. This comes from places like Fannie Mae, Freddie Mac, and Ginnie Mae. And second, there's security in numbers. So the more loans there are in any one mortgage-backed security, the more likely it is to behave like the average of all loans, making it more predictable for investors, and less likely that it's going to be a uniquely bad investment. Now, if you've ever applied for a mortgage and were told that you qualify for a conforming loan, that means that you met the minimum requirements to be put in a mortgage-backed security, allowing you to benefit from a lower mortgage rate. The general process for this is, first, you close on your mortgage. The lender gives you money to buy your house, and you give the lender an IOU promising to pay off the loan no matter what. And if you don't, they can take your house. Next, the lender will sell the IOU to Fannie Mae or Freddie Mac, who will take it and thousands more like it and throw it into a shiny new MBS. Next, Fannie or Freddie will insure this MBS, promising investors that in the event you don't pay your mortgage, they will pay it for you, giving investors peace of mind. Lastly, the MBS are then sold to whomever wants to buy them. And this process is so mechanical at this point that investors are so confident in it that they'll buy new MBS 1, 2, even 3 months before they are created, having absolutely no idea what's going to be in it other than high-level information, such as what the interest rate's going to be, what the minimum credit score will be, maximum size of any individual loan, or how big the down payment will be. And there you have it. Mortgage-backed securities are bonds that help me, you, and everybody else buy a house while helping the rich get richer. And everybody wins. Unless it's 2008 or 2009, then everybody loses. But we'll save that for another day. Awake my soul with mortgage-backed securities.